come more from the retail side because the investment advisors, the regulated investment advisors who control 30 odd trillion dollars of assets, uh, they will not yet be cleared to buy these products in client accounts from day one on a discretionary basis. They'll have to take orders from the clients. And it's only as these larger wire houses, as they're called, the Morgan Stanleys and the Merrill Lynches, they're going to start releasing like new versions of the 60/40 model, and it'll be something like 60/38/2, and that will clear the way for advisors to start putting those passive flows to work into the BTC ETFs. And I think in the end, a lot of these products are going to be pretty similar, but at VanEck, we've put a lot of effort into education and table setting. You'll see from our SEC filing that we seeded HODL with $72 million of our own money, which to our knowledge is the largest such seed among all the sponsors. We've got 200 pieces of Bitcoin research on our website, and we think the ticker symbols can be a difference maker. So very much looking forward to tomorrow.
Amazing. Now that we have all the celebration out of the way, let's dive a little bit deeper into the conversation. Cynthia, I'm going to tap you back in. Of course, there was a little bit of a fee war over the past few days with the asset managers listing and relisting their fees, seemingly lower and lower. I know Matthew and Ryan were a part of that. Cynthia, talk to me about what the main driver is going to be behind popularity for these ETFs. They were, of course, all approved at the same time. Is it going to be fees? Is it going to be assets under management? Maybe marketing, reputation? What do you think?
Yeah, this space, this race is so unique because we've never had before 11 funds come in at once at the same moment, creating a whole new category with nobody coming first, and then people coming up with ways to differentiate later as they follow the pioneer. So it's been fascinating to watch, the fee wars, because pretty much all of these products are very, very similar. They're providing exposure to spot Bitcoin in very, very similar ways. DeFi from Hashtags is perhaps the most different one because they're still transacting in the futures market and converting to Bitcoin, but they're going to keep both components in that portfolio. But so the point is, differentiation is really hard here because these strategies are extremely similar. So then fee becomes a big differentiator. But right now we have at least half of the funds at 0% fee with some form of a fee waiver. So even that differentiation is kind of going away. So then you go to probably brand and expertise. And sometimes, like anything else, people tend to be loyal to different brands. I think what's interesting in this space, and I love that VanEck is here and Bitwise is here, because from where I sit, I think there's an important distinction here between the true specialists in the space, the people with the conviction in the space, and more of the commoditizers of the space. So there's been a lot that has been said. It's not news, but a lot of skepticism about, say, a BlackRock and how much conviction does he have in this space. I mean, when you see the last couple of years for them, it's been all about ESG, and just last week we heard about all the layoffs that are coming ESG because he hasn't delivered. That doesn't suggest long-term conviction. It suggests more of a chasing an opportunity. So more power to them. But as an investor, these are the things you're going to be looking for. Who is the manager that you want to trust with your Bitcoin exposure? Where are your values aligned? What's the brand you like? Because there's not a lot of other differentiation. So I think one way to think about it would be specialists versus not, maybe experience in the marketplace versus not. The fees are going to be interesting. I'm really curious actually to see how these fees unfold, because in the ETF space, the fee waivers haven't always been, they're not used often, and they haven't been always very effective. I like to think of them as a lot of times one-way trips to zero. You go that way, and it's really hard to bring them back. And so you see a lot of times when an issuer starts with a fee waiver, they expire 6 months, but they get prolonged and they get extended for another 12 months. And it's really hard to get out of that. So I'm super curious to see how these get implemented and how do they get rolled back when these milestones are hit or the time frame is hit. So the whole thing here is very unprecedented, and differentiation is tricky. So it's been very interesting to see how the providers have dealt with that.
Ryan, Matthew, I'd love to get your reaction there. It's not every day we actually have people who can respond, Cynthia, to your commentary. How are you both looking at fees and differentiating yourselves?
Yeah, no, I mean, I think that's right. It's difficult to differentiate a product that from a 10,000 foot level offers the same type of access to Bitcoin. There's a few different variables at which these are, that these are different. And one would be the fee structure. The other would be, as you said, expertise in the area. You have, crypto specialists that have been in the industry and working in the industry to educate advisors and bring these types of structured products to professional investors for 6-7 years. And then you have large financial institutions that are well known around the world that are just getting into the space in this last year. And I think one element to look at is it competitively priced? Another element is how can I get in contact with them if I want to trade or make executions on large orders, and that could be meaningful to some investors who care quite a bit about execution and pricing on trades. And then are they going to be a crypto partner for the future? Is this something that they are, as an issuer, spending a little bit of time on, or is this something that they focus on 24/7, 365? And I know us at Bitwise, we spend all day, every day, fully dedicated to crypto. And we're here to answer questions anytime advisors have them around crypto, from everything to, what is Bitcoin, to what is Ethereum, to how do stablecoins work, what are NFTs, what does crypto gaming mean? And, for some investors that may not matter too much, and they may just open their terminals or brokerage accounts and find whatever ticker pops up first and whatever has the lowest or close to the lowest cost. But for some investors, especially the thousands of clients that we work with have worked with over the past few years, they really appreciate having experts in the space at their fingertips. And so I think that will be a large differentiator. I hope that will be a large differentiator among these different issuers. But ultimately, I think we'll have to see where flows go and see how that works out.
Matthew, we got to address the elephant in the room here, and that is Grayscale bringing $27 billion worth of Bitcoin to this. I believe there was an article on CoinDesk the other day that said Grayscale is bringing a gun to a knife fight. How do you differentiate your how are you thinking about, rather, differentiating yourselves when looking at Grayscale having that little bit of competitive advantage over the other applicants? Matthew, you are on mute if you are speaking. All right, Matthew might also be having connectivity issues, but Ryan, I pose the same question to you.
Yeah, I can take a stab at it, and Matthew, go ahead and jump in if you are able to get connected or unmuted. I think that it's it's the elephant in the room, right? Grayscale has had a publicly traded Bitcoin trust for many years now that has amassed a large amount of AUM. It's in the tens of billions in AUM, and that certainly gives them a head start in gathering assets into potential ETF. I think you start talking about fee structures and how much it costs to allocate to these, and I know in the conversations that we have with financial advisors and with professional investors, they pay a lot of attention to the costs associated with ETFs. I've certainly been in the room and had conversations where they look at fees of some of the products that we have at Bitwise, which can be higher for more specialty assets, and they simply say there's no way I'm going to allocate to a fund that has a 2% fee on assets under management. And I think that's certainly reasonable. I mean, if you think about investing in ETFs, whether it's in your 401k or your traditional account, you're generally speaking going to choose an ETF that offers a lower management fee if it has access to the same basket of assets or single asset. And so, the management fee is certainly one area that's going to play a role, I think, in Grayscale's success. They, I believe, have the highest management fee out there on their ETF as of now, but as was mentioned earlier, these can always change over time, and often do change over time, with ETF fees kind of being a race to the bottom. Fortunately or unfortunately, it's good for the investor. Obviously, puts pressure on the issuers, but yeah, Grayscale's had a big head start.
Yeah, Jen, if I may jump in here real quick, I was listening earlier to Tom, who's involved with 3IQ in Canada, talk yesterday, I think. And so, look at precedents, how can this all unfold? And I thought it was super interesting that as a parallel to GBTC is the company made is, 3IQ had this kind of private trust, closed trust for Bitcoin. And it came into the space. And when the ETFs arrived, it went from being dominant to completely marginalized by the big fund managers who stepped in. And so it could be that a transition for GBTC doesn't go as we expect. It could be, to Ryan's point, that fees, they're at 1.5% right now. Compare that to 0 for a lot of the other ETFs, or between 20 and 40 for some of the others. That is a big competitive disadvantage for them. So they have a lot of assets, and that's a good head start. But will they be keeping those assets once investors can actually leave the trust? Because by design, it's really hard to get out of GBTC once you get in. But as an ETF, the doors are open. So it would be really interesting to see how many of those assets find a home elsewhere, because of the fees themselves. I don't think their spot is guaranteed in this race.
Yeah, I just add to that I imagine a lot of investors in the GBTC product have sizable taxable gains, depending on when they first allocated to GBTC, since it has been around, I believe, since 2017, if I'm not mistaken. And so that might play a factor. Perhaps the fees are you can accept the high fees if you want to avoid taxable gain, for example. That certainly is one route that investors could take. So I do think that, generally speaking, what we've seen previously with Bitcoin futures ETFs, it was a winner takes most market. ProShares ETF gathered over $1 billion in the first day, and set records on that front, and has dominated the Bitcoin futures ETF market. And so it'll be really interesting to see how the flows play out in the first few days, and if 6 months from now or a year from now, if it's become a pretty distributed market share, or if the front runner in the first few days holds majority of the market share, like ProShares still does with Bitcoin futures.
Yeah, this industry struggles so much with the centralization versus decentralization conversation. Of course, there's a very decentralized ethos pulling away from that traditional financial structure. And now we have this event that we've all been waiting for that involves so many big Wall Street banks, it involves so many big financial players. It is allowing the traditional financial players to come and play in this space that said, hey, we are completely different from you, and we solve so many challenges. I would love to hear all three of your perspectives on that. Does this introduce more? Well, I guess it does introduce more centralization. And how are you looking at that? Is that a positive or a negative for the space? And Matthew, I'm going to come back to you just to see if we can hear you and you can hear us. If you don't go off mute while I'm speaking, I'm going to kick that back up to Cynthia. It seems that Matthew is still having technical issues. Cynthia, talk to me about how you're thinking about this.
Yeah, it's the beauty of the whole crypto space. The appeal is this whole, no sheriff in town kind of feeling, and regulation and 3,000 pages of SEC documents feels like the opposite of that. So it really is kind of a strange conflict of ideas coming in place. But, the truth is, if you are a crypto investor and you have your digital wallet or you have your Bitcoin in cold storage, and none of this changes any of it for you. In fact, it broadens the access to other types of investors, let's say, and it could benefit the price of Bitcoin if you think of just your classic supply demand story. Supply is limited. If you're going to bring in more investors, demand is going to go up. That could only be positive for price over time. So as a true crypto diehard believer, this really doesn't matter to you. It could actually be a net positive for you, and you continue in your, decentralized world as you were. I think as much as this is different than the natural ethos of the crypto space, it really is. And I've heard this word used a lot, but is the concept of the bridge. Is bridging that TradFi to DeFi in a way that's constructive for everybody. So, for example, if you're a hedge fund out there, you can't access spot Bitcoin. You can't do that through broker dealers. You can't play in that space. But now with an ETF, you can actually go, long spot, short futures, or the opposite, or you can play around with this stuff. So it opens a whole new type of investing. It opens all sorts of trading opportunities. It opens all sorts of hedging opportunities, other than bringing in the big institutions, other than bringing the advisory channel. So I think at the end of the day, this is an access story. ETFs as a structure are about access. It does put in regulation into that conversation more so than maybe we wish to see as a pure crypto story. But I think it's a net positive. I think it's going to open the doors for a lot of people to do a lot of things they couldn't before in the crypto space in a more regulated, more oversight, protected way, if you will.
I guess on the centralization piece, given that these large entities can and will hoard Bitcoin now, does that issue a concern for you, Ryan?
I mean, if I take off my traditional finance hat, I've worked in traditional finance for 10 plus years, and obviously we kind of play that bridge role at Bitwise, having one foot in each world. I think that I can certainly sympathize with those of us who came into crypto really focused on decentralized technology and an untethered, non-sovereign store value that's separated from the traditional financial system. I think from that point of view, there's a little bit of stomach turning that happens when you see these big names like a BlackRock or Fidelity or JP Morgan getting into the crypto space. But broadly speaking, it doesn't worry me. I mean, these are firms that are working with regulated third-party custodians. There are a lot of protections that come from structured fund products that don't exist on offshore exchanges like FTX, for example. And so in a lot of ways, this brings some regulatory framework and some safeguards into place for traditional investors that I think they really appreciate. And it doesn't worry me so much that a big organization is going to hoard a bunch of Bitcoin, because really they're just taking in dollars, purchasing spot Bitcoin and holding it with a third-party custodian on behalf of those investors in a given fund. And if those investors want to, exit the fund, and if that's what needs to happen, they'll sell that Bitcoin back onto the market. So I think this just brings more capital into the space. It brings more demand for Bitcoin into the space. Bitcoin is a commodity. Its price is based on supply and demand. And this is a rather large demand shock that I think we'll see play out over a multi-year period. And we saw the same thing happen with gold ETFs back in the early 2000s, where the first gold ETF was listed in Australia in 2003, and then in the US in 2004. And then we saw a 10-year period where gold experienced double-digit returns almost every year following that. And really the price of gold is somewhat skyrocketed following those ETF listings. And I think we could see something similar happen with Bitcoin now that we're unlocking all this demand. And then you have other catalysts like the halving coming up this year, which a lot of people aren't talking about because they're so focused on the ETF. So it doesn't worry me. It actually excites me quite a bit that we're now going to see a lot more investment opportunity in the space for majority of wealth in America.
I want to do a quick price check now. Bitcoin remaining relatively unchanged, $45,743 right now, down almost 0.3%. But what's interesting here is Ether is up almost 7%, $2,522. We saw Ether pump over the last few days. People are now talking about a spot Ether ETF. Cynthia, you and I have spoken about this on First Mover, but Are you surprised to see the price of Ether pumping so soon after the Bitcoin approval? And what's it going to take for us to get a spot ETH ETF?
I think surprise is a word. I don't even know. I think it's going to be redefined after this week. I think nothing surprises anymore, and at the same time, everything's a surprise. I believe that it's the natural progression here for a spot Ether ETF to be what follows next. I mean, we went from futures Bitcoin to spot Bitcoin. Futures Ether is already okay, so why not spot Ether? I can't imagine what's the argument for that not to be approved. I think, if I remember correctly, isn't there I think there's a deadline. The next deadline for any conversation about spot Ether comes in mid-May on a couple of filings. If I remember correctly, I'd have to go look that up. But I think we may have some peace here for the next couple months, but then we'll probably be talking about the race to spot Ether ETF late spring, early summer. That's my guess, but I'm not sure.
Ryan, before I kick it off to you for your opinion on that, I'm just going to check in with Matthew again. Matthew, are you with us? I have a feeling Matthew maybe is appearing on television and might join us, but it doesn't seem like he will. Ryan, what are your thoughts? What's your outlook on a spot Ether ETF, or maybe even another asset?
Yeah, it's now that we have this kind of landmark moment where we have spot Bitcoin ETFs. I think that opens the door for other crypto asset ETFs in the future. It certainly raises the probability, I think, that we could see spot ETH ETFs in the future and other crypto assets. I don't know if we'll see one this year. It's kind of still up for grabs. I think everyone's been so focused on the Bitcoin ETF, and there's a lot of distinct nuances, obviously, between Bitcoin and Ethereum, and those will have to be taken into account. And the market is not as mature for Ethereum as it is for Bitcoin. I mean, Bitcoin's been around since 2009, Ethereum since 2015, and so that definitely plays into how mature the market is, and if the SEC is comfortable at that point with spot Ethereum ETFs. But the win that Ripple experienced with XRP in courts earlier this year, the win that Grayscale experienced with their lawsuit with the SEC earlier this year, I think certainly provides some tailwinds for potential other ETFs to be issued in the future around crypto assets. And it's that's really exciting. And I think there's a lot of attention clearly spinning to Ethereum. I was surprised to see the price of Ethereum up 7% or whatever it is right now, following the announcement with the price of Bitcoin kind of trading flat. That definitely surprises me. And there's been a lot of talk about this rotation of interest going from Bitcoin into Ethereum as soon as we do have approvals, and perhaps we're seeing that play out live in front of us, and or perhaps until we have actual listing of spot Bitcoin ETFs after the S1s are approved. Maybe that's when we'll see if Bitcoin price react, if we do see a reaction there. But of course, there's always the possibility that these approvals were priced in to Bitcoin. It's been at the forefront of news for the past 6 months. So really interesting to see the market dynamics playing out live here.
All right, we are coming to an end in our conversation. If you have any questions, please raise your hand. Our wonderful host, Casey, who is manning the CoinDesk account, will alert me, and we'll bring you up on stage to ask Ryan and Cynthia your questions. While we get those questions ready, Cynthia, I'm gonna throw it to you for some final thoughts here. What does this next step mean for crypto as a whole?
So I think in very broad sense, what today and assuming the launch of these products as early as tomorrow, potentially with these S1 approvals that are upcoming, it really is an access story. So the access story has been solved. Now that the ETF as a structure opens up access to crypto to a much larger audience, I think the next will go from access to now focus on adoption and evolution, right? So it would be really interesting to see who actually shows up and buys these funds. Is it going to be the advisory channel? Is it going to be primarily institutional? Is it going to be the trading community and use it for hedging tools or whatever? And once that adoption, we get a better taste of what that looks like, then what's the next evolution of these products? And we're already starting to pick up clues about that. The concept of leverage and inverse Bitcoin exposure, or options overlays on Bitcoin, all sorts of income plays. I think once this race settles a little bit and we kind of get a ranking, we're going to start seeing the next wave of product development, which could be really exciting. And I think, just overall, it just grows this conversation about crypto exponentially. So the education around it, the curiosity around it, hopefully will grow too. And, it should help fuel the technology development, the blockchain, tokenization, all of these things that are associated with Bitcoin. I think have so much upside potential now for exploration, conversation, development, growth, now that we have solved that access piece. So I think it's really exciting. I think we should see a lot of new crazy ideas pop up. So I wouldn't take a long vacation, because I think this train is not stopping anytime soon.
We all need a long vacation, though. before
No argument there.
I know, right? We all deserve it. Every single person in this space deserves that vacation after the saga that led up to this. Ryan, before I kick it to you for your final thoughts, I want to remind everyone that we do have some time for questions to both of our guests, Ryan and Cynthia, so don't be afraid to raise your hand. Our host will make sure we see you and bring you up on stage. But Cynthia, I do have a follow-up question for you. Who do you think is going to come forward and participate in these ETFs? You listed out potential folks, potential entities, but where do you think the majority of interest is going to come from?
That's a great question. I like to look at precedents for that kind of stuff, because it's really a guessing game for anyone. And it's interesting that I was just looking earlier today at Canada versus Brazil, and it's been completely different paths. So the Canadian market, everybody thought it would come from the advisory space, and it was a big institutional play. It was a big, first wave was mutual funds chasing alpha, not really, advisors. The Brazilian story, where they've had spot Bitcoin ETFs for, I think, 3 years now, it's completely different. It's been all advisory channel. 80% of advisors there own Bitcoin ETFs today. So there really is not a lot of, it could be anybody's game in the US. I think traditionally, though, I don't know. I would be surprised if advisors move very fast here, because most advisors, they're fiduciaries, so the decisions they make, they're fiduciary decisions. They have to stand by them, they have to explain them, and they have to defend them. I think the learning curve here is huge. There's a lot of product to look at. So I don't think this is going to be an adoption that happens overnight. I think it will come. I think it will be huge, but I think it will take a little bit of time. I don't know if institutions move faster. I've heard numbers like, we could probably see $2 billion come in one day from hedge funds that have been on the sidelines waiting for this type of access. So it could be that the initial flow is both seed, like the billions of dollars that we're hearing BlackRock is going to bring in tomorrow, and hedge fund trading money. And the institutional advisor space, a little slower. But it's a little bit anyone's guess at this point. Maybe, Ryan, you have more visibility into it based on your conversations with the channels.
Yeah, I think that's right. We're gonna have to see where the interest comes from. I know that there's a lot of hedge funds out there that have already had access or have been comfortable taking access to Bitcoin through futures markets or other means. And so I really think that the interest in the spot Bitcoin ETF will come from financial advisors that are either part of traditional wirehouses, the Morgan Stanleys of the world, that have not been able to access Bitcoin or crypto assets more broadly, because for most financial advisors, they require the compliance stamp from the organization they're associated with to invest in crypto. So they trade on a platform that things need to be approved by the compliance department before they can access them. A lot of those compliance departments around the U.S. have really not allowed access to crypto. I mean, some have allowed access to crypto equities, the Coinbases and Bitcoin miners of the world, and a few have provided access to Bitcoin or Ethereum. But more broadly speaking, most of the professional advisors in America, which really manage around 80% of wealth in America, just haven't been able to access it. And so I think institutional investors, professional investors, the mom and pop financial advisors and RIAs, and then a lot of retail investors, weren't comfortable allocating to crypto on centralized exchanges or certainly through decentralized exchanges and self-custody. And so interested to see where these flows come from. I think it'll be from a variety of sources though, and I believe it will mostly come from financial advisors and RIAs.
All right, I said we were wrapping up, but I lied a little bit. Sorry, everyone. We're just going to have a few more minutes here, but I have to introduce Nick Day to the stage. Nick is on First Mover with me almost every day, not every single day. He's an award-winning journalist who covered the Sam Bankman-Fried trial. He even issued some of the best court drawings that I've ever seen in my life. Nick's been following the ETF story very closely as well. And Nick, during this conversation, I've seen Slack messages flying across my screen. What's the update? A lot can happen in an hour. What's going on?
Hey, yeah, sorry, I just jumped in at the end here. So not sure what all you've discussed today, but obviously the ETFs are approved, and right now we're just waiting on a couple last filings before we know for sure that A, things are going to be trading tomorrow, and B, what's trading. So for example, we're just waiting for the SEC to deem the S1 filings effective, get those out, and then for the issuers to say, okay, yeah, we're ready to go, we're going to file something and say we're beginning trading business open on Thursday, January 11th. So lots happened, but quite a bit left to go.
All right, on that note, Ryan, I'm going to kick it off to you. What does this next step mean for the industry at large?
It's huge. Honestly, it's huge. This is, this isn't the last step for crypto, for Bitcoin at all. This is actually one of the first steps, I believe, to continuing to see Bitcoin grow from an adoption standpoint. I mean, Cynthia talked about how this unlocks access, which is huge, and will help mature crypto as an asset and continue to bring it to the forefront in a lot of investors' minds. And so, yeah, it's just a really big moment. There's a lot of exciting things ahead for Bitcoin and for crypto as a whole. I think we're only 15 years or so into this story, and there's a lot more ground to cover and a lot more to achieve. And so I think a lot of people look at this spot Bitcoin ETF approval as one of the final kind of end game moments and the final achievements. But I know that I'm certainly looking at it, and us at Bitwise are looking at it like it's the first or second inning of the game still. And so really excited for what's ahead and for other crypto assets to be able to finally be accessed by professional investors, and for just increased adoption. And this regulatory stamp approval on Bitcoin certainly will drive that. So really excited about today and about this moment.
All right, I'm going to do one last price check. Bitcoin is up almost 1%. I know everyone was thinking it was going straight to the moon. It's at 45,919, and Ether up over 8% now, 2,518. Nick, I'm going to give you the last word here. Were you surprised to see such little price action when it comes to Bitcoin after this approval? We've had a bunch of analysts talk to our journalists on CoinDesk TV and our journalists who are writing articles for the site, predicting big price movements, and we didn't really see that.
Honestly, after yesterday when things went a little haywire after the SEC Twitter account was hacked, I guess I'm a little less surprised than I might otherwise have been that there was not much action. But I'm going to be honest, I have zero idea what Bitcoin's price is doing at any given moment in time. So I'm just a guy with a cup of coffee here.
Aren't we all? Aren't we all just people with a cup of coffee trying to make sense of this industry? I want to thank everyone who listened to the Twitter Spaces. Thank you so much for joining us. It doesn't look like we have any questions, but if you come up with a question or you want to find more information about what's going on in the ETF space, you can always head on over to CoinDesk.com. If you loved listening to this, I host First Mover every morning. You can watch that on CoinDesk TV and Markets Daily on the CoinDesk podcast network. Now, I'm going to use this time to do a little bit of shameless promotion here. If you were here, you enjoyed this conversation, we're going to have a ton more conversations just like this at Consensus 2024 in Austin, Texas. It is our big tent event where we talk about the future of the industry and to celebrate the Bitcoin ETF approval and to inspire more people to dive into the world of crypto. So there's a little bit of a BOGO sale. Who doesn't love a sale to celebrate the ETF approval today? You can use this code ETF50. That's going to get you a full pass and then another full pass half off. So buy one, get one half off. I feel like I'm doing a commercial right now. I guess I am kind of. The code is ETF50 during your checkout, and that will get you to Austin, Texas, so that you can listen to, participate in, and watch more conversations like this. So we'll see you on CoinDesk.com. We'll see you on CoinDesk TV. Thanks so much for listening in, everyone, and we hope you have a great evening.